We do own it, but I would look to buy it because, number one, I think buybacks will provide us support. They don't like it here. Let's say the stock slips a little bit. They're looking to deploy some capital. But number one, the death of JPMorgan is greatly exaggerated. It will survive without Jamie Dimon. I think they're being very, very smart, introducing this, reinforcing it, saying, let's get this bench ready. Let's get the street used to some of these names. Let's get some good experience promoting some managers. And that way, then as transition comes up, it's less of a shock, right? So a little bit maybe of a Band-Aid being ripped off. But look, he's 18 years into this job. He's 68. We knew he wouldn't stick around forever. But now we're looking at well-ordered succession, which I see as a huge positive. Look, this bank operates just absolutely perfectly right now. And so it's not like they're coming into a fixer-upper. They're coming into, driving a Porsche that's at top speed.
All righty. Thank you very much, Victoria. Let's go next up to Palo Alto Network. Shares on the decline today, and Frank Holland will tell us why. Frank?
Hey there, Tyler. As you mentioned, Palo Alto lowered today on what's being called modest guidance on billings. But as you can see here on this chart, shares are down double digits since last earnings when Palo Alto announced its platformization strategy. So that announcement, it hit all cyber stocks as concerns about the strategy that often involves giving free trials hit the entire sector. This report, however, eased many of those fears in the eyes of analysts, if not investors today. The numbers for next-gen security, annualized recurring revenue, you can see the bar chart here, came in better than expected. Analysts I spoke with say channel checks show better than expected adoption. Palo Alto's deal to buy QRadar from IBM is also expected to help the company secure larger deals in the $215 billion security and risk management area of cybersecurity, and more specifically in SIEM. That's an acronym for Security Information and Event Management, where there's just a growing arms race. According to Gartner, Microsoft and Cisco, after its acquisition of Splunk, they're the leaders in the space. Two other private players also recently announced their plans to merge. Analysts say with QRadar, Palo Alto is poised to capitalize on this new cyber landscape. Investors, however, at least today, clearly need a bit more convincing.
All right. Thank you, Frank. There's the background. Victoria, what's your trade here on PANW?
For me, Palo Alto is a sell, and it's because this platformization is taking too long. After last quarter, we expected the expectations were baked in, right? We ripped the Band-Aid off, we have lower expectations, and now with this earnings, we're like, okay, wait, we maybe have to lower them again. We never liked that. We need them. We thought we reset last quarter, and now we're looking at a longer ramp. We're looking at maybe lower margins because they're having to discount. And honestly, they're also talking about corporations are focusing a lot of their spending less on buying more platforms and modules from them, but on Gen AI and on the cloud migration. So they're kind of taking a third place back seat in where corporations are spending money. Look, they've been on a tear. They're up 140% since January last year. For me, it's a sell because I think they're just having to reorganize. And there's just this question of, is this really priced in, or do you have a little bit more slowdown cut to come, especially after last quarter and then this quarter not really living up to what we thought we'd see?
All right, Victoria, let's move on to our last name then, which is Lam Research. Not on the Lam today. The shares are up amid some excitement and enthusiasm about the stock. Christina Partsinevelos, bring us the story.
I've got the toppings for your Whopper, Kelly, but that's because the semiconductor equipment maker announced a surprise 10-for-1 stock split for early October. It's the first stock split for this company in 24 years. They also announced a new $10 billion share buyback, although there was no timeline on that buyback provided, and also runs counter to what my colleague Leslie Picker just said about Jamie Dimon's thoughts on buybacks, but oh well. These announcements, part of Lam Research's commitment to return roughly 75 to 100% of annual free cash flow back to investors, something they've promised in the past. The stock, though, has been trading in this low range, $900 range for a month after pulling back from near $1,000 levels in March and early April. You can see that just on your screen. You can see trading at $960 right now. Investors are going to be looking to see if the stock split and the buyback can actually get shares closer or maybe above that $1,000 mark, but the stock split won't do anything for market cap. We know that in terms of math, but it could invite more investors to participate. And I have to mention it, NVIDIA earnings will obviously play a role tomorrow in Lam's stock direction. If NVIDIA's demand remains strong with a major uptick in guidance, expect a lot of semi-cap equipment makers to also rise because, you need that equipment to make the chips.
Indeed. Christina, thank you. And Victoria, what's your call on Lam?
It's a buy. They went from like 115 million share back to 10 billion. Who doesn't love that? And they manufacture semiconductor manufacturing equipment. So they're actually getting a huge lift. They're Micron, they're Intel, they're Taiwan Semiconductors. They have huge customers that are expecting to grow revenues. How can you not love this stock right